Good morning everybody and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 5th of September and you're joined by myself, Philip Nuthard.
And me, Curtis Hutchinson, for all the chatter that matters for episode 377.
Yeah, thank you again for that one, David. I know we had a little bit of a social chit-chat last week on the Chatter That Matters hashtag, but thank you for coming up with that one. As I say, we'll be using that.
Yeah, it does worry me a bit because he's sort of talking about royalties now, isn't he, if it goes viral?
Yeah, okay.
he wants a piece of the action.
Is it? Yeah. Well, we won't charge him for the interview we did with him recently either, but we'll. David's welcome back on any time, and
yes,
it's all good fun. I mean, what a good interview with Louise Wallis, who's the head of business from the NFDA this week, and you know, really talking around that. We actually quite interesting. We had quite a long conversation following the interview about it as well, didn't we? Which, you know, we went into a little bit more detail around that sort of move towards agency modelling in the UK, what block exemption means for the UK dealers and potential impact of WTO with Brexit. But quite an interesting interview, that one.
It is, yeah, and we're running the interview at the end of this show after the headlines, so do stay tuned for that. And as you say, it is a fascinating interview because there's been so much talk over the last couple of weeks about the agency model, and it was prompted by comments made on social media by Dash Gupta. And our conversation with Louise really gives it some context. And of course, it acts as a reminder that it's not new. You know, this is the model back in the 50s and 60s, and you know, it's re-emerging. But you know, probably not in a big way, but still significant anyway.
No, definitely, and this week, I mean, just pre our recording here, that we've not had the full sight of the new car figures for August. It has been muted in some of the media, and I've had sort of some sight of the figures as well. But the reports are that August was down approximately 5%, which would take us down to just over 87,000, down from just over 91,500 last year, which is actually, I don't think that's a bad result, because bearing in mind that, you know, August 2019 and 2018 were influenced by RDE and WLTP, yeah, get it right, so many acronyms these days, you know, because of those introductions in the last two Septembers. So actually, you know, we were ahead, because I think the average for August is about 73,000. So if we did finish on the just over 87,000, that's not a bad result really, and that kind of supports some of the sentiment coming out from the dealers that they've again had a record month on profitability. So, you know, since lockdown was lifted in June for much of England and the UK, that, you know, they have been reporting some recovery, some profitability through the retailers. So hopefully, you know, a third month of positive results will help recover some of the losses that they incurred through lockdown.
Yeah, and on the back of that, we can report actually next weekend on eBay Motor Group's findings from August, because they've been looking at the used car market, and certainly the early figures I've seen are very, very encouraging. So we'll have a full report on that next week.
Yeah, and I mean, there's some. You know, France was down 19.8% in August. Spain was down 10.1% in August. Still awaiting Germany figures to be confirmed, but I mean, the US was down 20.2%. Down to 1.3 million. So they've had a significant drop. So I think, you know, in all support for the UK automotive dealers, I mean, a 5% drop from a reasonably high number of 2019 isn't a bad result all around, if I'm honest.
So headlines this week, we've got Pendragon drops car store brand, but still has ambitious used supermarket plans. Cambria reveals higher than expected trading performance, but warns of significant job losses on the way. Motorpoint expects shares of online sales to increase following record levels of interest. The digital disruptor Carzam names its first CEO. Volvo launches a car subscription service. And finally this week, here's one for you, Phil. What's green, stripy and found on the side of a plate?
The new electric car. The green car's launched in September. There we go.
Yeah, stay tuned for that.
Have you seen any yet?
No.
No, I haven't. No. But then again, I'm not going out much these days, to be fair with you.
Well, anyway, I was going to say exactly the same. I can't remember why someone went out. So.
Yeah, cars outside. What's all that about? Yeah, we'll see if we spot any on at the weekend. Send in your pictures if you see any of the green plates on your travels this weekend after you've listened to this podcast. So, the first story, I mean, this has come as an exclusive with Car Dealer Mag, and Car Dealer Mag had the interview recently with Bill Berman, who has taken over Pendragon, and Bill has been fairly direct and opinionated on their plans with Pendragon, and the header is that Pendragon boss Bill Berman ditches car store name for firm's used car business because he hated it. Now, this is kind of alongside a report that they've done detailing sort of the three strategic plans that they've got for the business around the development of the UK franchise network for them, development within the sort of Pinewood business that they've got around that sort of digital side of the business, and the used car growth as well around what they're looking at doing there. But this was the story is about some comments that James managed to have a chat with Bill about, wasn't it?
Yeah, there's some lovely comments in this, and Bill is shooting from the hip because he was saying that had he been given a list of 10 suggested names for this operation, and if CarStore was one of those 10, he would have ranked it number 11. He's not a fan, and he goes on to qualify that by saying that you wouldn't use the word store for a digital platform, and used cars, we're talking digital now, and it's not a comfortable fit, and it will be rebranded. We don't know what it will be called yet, so that'll be intriguing to find out what that is. But let's just rewind a little, because it's I remember back in early 2016 we were actually approached by Pendragon. Obviously Trevor Finn was the boss at the time, to do an interview about his plans for the used car operations, and that's where the car store plan was actually unveiled. And at the time, it was a 5-year plan which would have seen 40 sites opening between 2016 and 2021. I'm not sure how many of those 40 actually opened. I mean, there's certainly got probably low to mid 20s. Maybe a few more. And of varying sizes, because some of them were literally pods, others were converted dealerships. But it was a bold plan, and okay, it didn't pan out as it was planned, but it did show an intent shown by Pendragon at a time when other groups maybe weren't looking that closely at multi-mark used cars older than the sort of 3-year norm.
No, you're right, and I think things have changed, things have moved on obviously significantly then, and obviously Bill has got history in that sort of used car market from over in the US, and the plans this time are that they are looking at delivering an underlying profit before tax of 85 to 90 million by full year 2025. So some serious ambitious plans there, but that is underpinned, as I say, by 3 priority strategic moves that they've got. So that is one, as I say, to unlock the value in the franchised UK motor division. Second is to grow and diversify their Pinewood business that has proved itself very profitable over the years and supported Pendragon in their financial results. And the third one there is, as you say, I mean, they're looking at disrupting the standalone used car operations in the market. So some very ambitious opportunity growth plans there around profitability, but they do believe that the group is well positioned to deliver a transformational performance. So again, I think from what I believe, it's been well received from the investor market. He's certainly making the moves, and by the interview that you were just talking about there, he obviously isn't holding back on some of his opinions and what he wants to do. So I think Pendragon is going to be certainly one to watch as they recover, should we say, and start to change their model.
And Bill does actually clarify what his thinking is, because he's talking about having 8 purpose-built car supermarket centres, and these will be large footprint sites operating as stocking points, retail centres, and also hubs for home delivery. So you can see where he's upscaling there.
Yeah, and sticking with Car Dealer Mag and moving on, and we're talking about Cambria here, and Cambria has published some, is it interim figures? I think it is interim announcement, yeah. And they're talking about reveals higher than expected trading performance, but warn significant job losses on the way. And I think we talked through the Marshalls one recently, we've talked through the Virtue one recently as well, and I think when we had Mark on the podcast, and he was fairly vocal at that point and after that around the significant impact that COVID-19 could have on employment across the sector. And he I think if I get my figures correct, I think at the time he was forecasting anything between 20 and 35% of losses across the dealer sector. So, and he's come out but they've had a reasonable performance since lockdown. I think their financial is up until the end of July, if I'm correct.
Yes.
With the performance there, but does warn of still job losses to come, I think.
Yeah, you're right. The talk is of significant reduction in jobs, and bearing in mind the group currently employs around 1,200 staff. So we'll see what comes of that. But within this, and it's something that Mark Lavery did actually talk about when he was on the podcast. The strength of the high luxury segment, which is a strategic move that the group made 4 or 5 years ago now, because they were possibly too exposed to the volume brands. So they have been going up markets. I mean, they've just added Aston Martin and Rolls-Royce within the last 12 months. But it's that high end that it is giving them a cushion.
Yeah, and I mean they're fairly positive, about the trading performance that trends in June, July, and into August. They're saying are encouraging. Goes against what we sort of heard from both Marshalls and Virtue, that they were talking about a significant increase in order take going into September. He's talked that the rate was slower than previous years. And that the board has concerns around the broader economy and the consumer confidence heading into the fourth quarter of the year, and obviously it does then reference the lack of clarity around the terms of the UK's departure from the EU, and whether a free trade agreement will be in place to avoid tariffs on the importation of cars and parts into the UK. And it does cite that a 10% tariff, which we've mentioned a couple of times on the podcast, on all these products would have a significant impact on sales volume. So still a lot of questions to be answered, I think, at the minute.
Yeah, and that's also something that Louise Wallis touches on in our interview with her, which is on after the headlines. So do stay around for that.
And moving over to AM Online now, and this is around Motorpoint, and they are talking about that Motorpoint expects share of online sales to increase following record interest. Now, there isn't many stats to support this, is there, from what we've seen? I mean, they're talking about Motorpoint online attracts 250,000 calls, 23,000 web chats, and 26,000 email inquiries per year, and obviously they're doing a push towards online, follows the recent trend that many of the automotive retailers have cited following COVID-19.
Yeah, and it is a kind of underlying theme this week, because we've obviously already talked about what Pendragon are doing in terms of online used car sales, and we'll be visiting Carzam a little later. But there's an interesting comment here from Phil Matthews, who's the operations manager at Motorpoint Online. He says more and more customers are choosing Motorpoint Online as their first point of call. With all the ways we're making it easier for people to browse and buy online, I can only see that figure growing, which, yes, that is the movement of direction at the moment. Obviously, a lot of interest in online sales. But it's also this week, I think it was probably the day before this particular story broke, Robert Forrester tweeted quite an interesting point. He said, in August, we sold the record number of pure online cars in the month since we launched in May 2017. He goes on to say that included just 58 deals, and he says most people still want interaction, and he kind of has a point, because whilst there is this demand to have greater sales capacity online, and certainly being able to search and configure cars, choose cars and all that, customers still like to go into dealerships. They still want to interact, even with COVID. And this is what we're hearing a lot of at the moment.
Yeah, I think that's the bit that we need to keep in sight of. I mean, we've seen what happened with Kazoo. And obviously what they've been talking about recently around that support infrastructure and investment in that. And I think that's the bit that, there is that move into the digital, that e-commerce world, but the consumers still like to have some kind of interaction, don't they, in a physical environment. And it's a case of the retailers having that sort of cohesive approach. And I think we've spoke about it numerous times on some of the COVID-19 special interviews that we've had with the leaders in the sector, that there is that, the key thing is to get that cohesive approach correct, that physical to online needs to align with each other in many ways, and that consumers do want to have that physical interaction in many cases with the purchase of a vehicle. So, it's again, but it does cite the direction of change, and the good thing is that, the leading motor dealers in the sector are acknowledging it and moving towards it, which is key.
Yes. So you're listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available by subscribing on Apple Podcasts, Google Podcasts, Spotify, Deezer, and SoundCloud.
So going over to Motor Trader now, and this is a story for Kazam, appoints new CEO, Kirk O'Callaghan, who has joined the business as the first CEO, as you say there, and he's been appointed from Sytner's or Car Shop, wasn't he, previously? So he's gone across there to run the Carzam business for those guys.
Yeah, he's got an interesting background, because he held a number of managerial roles at Halfords before joining Car Shops in 2013 as operations director. So he was there at the time of the Sytner acquisition and became operations director of Sytner Cars supermarket division in January 2018. So yes, he's been announced as the first CEO, and Carzam is going to be a fascinating one to watch. sees the collaboration of Peter Waddell of Big Motoring World and John Bailey, former president of Cox Automotive International, who ran Mannheim for many years. So the coming together of two giants in the used car market to launch this online digital disruptor, CarZam, and it's actually launching in 8 weeks' time. So if you go onto their website, there's a countdown clock. Last time I looked, it was 8 weeks, 2 days, 5 hours.
Yeah. So I don't know what it is. Try and guess what it will be when this goes live on Saturday morning, then, Curtis.
Oh God! It'll be 7 weeks and 4 days, or something like that.
Yeah. So moving on to the next story, and this is in Autocar, and this kind of supports a little bit of the conversations again we were having with Louise this week from the NFDA around this, the move in terms of this agency modelling and kind of that whole world of subscription service in the UK and from the manufacturers, and this is that Volvo has launched its Care by Volvo subscription service across the UK, claiming that the scheme offers a genuine, flexible alternative to buying a car. And the one of the figures in there is that you can get a XC40 entry-level T3 Momentum for £559 per month. And no deposit needed. Insurance can be added as an option, with Volvo offering new customers a 30-day trial.
Yeah, and as you say, it includes servicing costs, wear and tear, maintenance, replacement tyres, roadside assistance, road fund licence, tax, and apparently 10 gigabytes of in-car Wi-Fi per month. So still a lot, though, £559.
Again, kind of, I suppose there's other conversations that we've been having recently. It's how much do you pay for that flexibility, I suppose, is the big question.
Yeah.
What is that flexibility to be able to get a car when you need it, swap it when you need to swap it, worth to the consumer? How many people want to go into a 2 or 3 year fixed contract, and how many people are willing to pay that extra money? And I suppose we're still early days with some of this subscription model services that, I think some of the manufacturers will probably continue to review the value of it and what that sort of step up is worth. But what will people pay to be able to get a convertible for the summer months and switch over to an SUV for winter months and just continue with a payment that is affordable to them, which would be more than what a PCP or PCH could be?
Yeah, now, interestingly, because we covered this probably last year when it was being piloted, because part of the Volvo Care scheme was this ability to swap your car in. So if you're going on holiday and you want a big estate, then you could have that for a week or 2 weeks or whatever. But apparently that's being dropped because there was only very limited demand in the pilot. So that won't be part of this scheme, which did actually give it, I thought, a very good USP.
It did. I don't know. I think, is it that consumers don't want to mess about? Is it a case that, do they want to get one car for doing one thing or get another one for doing something else? Or are they just quite happy in, getting a car for a period of time that suits the majority of their driving behaviour? I don't know. I suppose it's a difficult one, that one. But yeah, interesting that they've dropped it based on the pilot. So it's quite interesting, really. And there's quite a cute comment in here that comes because they've compared it to the growth of ebooks, and the comment is that the Amazon Kindle didn't kill the book. It just complemented that market, and quite interestingly, I think the book market sort of grew, didn't it, in years that once the Kindle was launched.
Yeah, I know. I mean, I am a Kindle convert, but I can't remember the last time I bought a book. So maybe it doesn't work in my case.
No, well, you're a Volvo driver as well, though, aren't you, Curtis?
I am indeed. Yeah. Now, interestingly, just to wrap up on this story, Volvo do actually talk about what their aspirations are, and they've got a target of 5% of new car volumes from next year. And within the piece, it says that these targets have actually been exceeded in other countries. So that 5% could be a tad conservative. We'll have to invite Christian Elfors back on, maybe middle of next year to find out how it's all gone.
Yeah, or maybe sooner. Maybe get him on to talk a little bit about this subscription service, because we I think he was one of our earlier interviewees on the COVID lockdown, and it was really focused on what Volvo did going into lockdown and how they're managing through lockdown. So maybe it's due in the next few months or something to get Christian back on and go through some of these plans that they've got for Volvo going forward.
Yeah, well, he's probably listening and having his breakfast at the moment. So
yes. So, final story. We've got a little and finally here, and as you mentioned right at the start there, this is from This Is Money, and it's focusing on the green version number plates for electric cars, and it's quite a nice little segue into talking about that September market a little bit, and we kind of mentioned it on earlier conversations around what Marshall's, Virtue and Cambria are citing in terms of that order bank for September. But this is about that, we know that the launch of identifying green vehicles in terms of electric have now got green plates, and that consists of a stripe down the side, a bit like the old EU identification, wasn't it, that we had on plates for a period of time. I don't think we can do them anymore, can we? Unless you're driving abroad somewhere. But it's obviously designed to promote EVs in the UK, and obviously paves a way to the future initiatives and incentives. And we kind of talked a lot about EV on the podcast last week around the Green King initiative, and quite interestingly, I got a few notes on a Twitter feed on that subject, and one of them was suggesting that they should pay more attention on the food and the service they offer in the Green King rather than thinking about charging electric vehicles. But I didn't pay much attention to that one.
The beer is very good, though.
Exactly.
I'm a big fan of Green King.
So
this story. It's all very well and good and laudable, but it does kind of smack of the sort of Blue Peter badge, doesn't it? So you get that sort of warm feeling wearing this new badge and telling the world that you've got a green car.
Yes, yeah. But it is. It's a serious thing. We are talking about the growth of electric vehicles. September is a key month. It's been all over the press in recent weeks from people like Sue Robinson from the NFDA and Robert Forrester and Marshall's Dash Gupta around the sort of the key necessity on September performance and after. There's a lot lying on this sort of final quarter of the year in terms of activity around that new car market, both from the manufacturers and the retailers themselves. So there's a lot hanging on the performance. Many do believe that we will see an increase in September in terms of the performance. Again, back to what we're talking about around August. It's from a lower point last September. I think we're around the 343,000 compared to an average September is around the 450,000. So, again, we will expect an increase, I suspect, but good activity, good order banks, but there is a bit of a split at the minute between vehicles that are going to arrive in time for September and those that may actually fall over to October and November because of the slow efficiency and productivity in some of the factories of some of the manufacturers and getting those vehicles over to the UK.
That is the absolute key for September. It's supply, because we know that there's pent-up demand out there for new cars, and you've cited a couple of groups who are expecting a bumper sales period in September, but supply is everything. And again, that's something else we talked to Louise Wallis about. So do stay tuned for that.
Yeah. So again, a lot riding on it. There's comments coming out that there is a lot of encouragement from the manufacturers to just take orders, get the consumer and whoever into the order system, get those cars on the system and ordered, and they'll try and push supply as quickly as possible. So there's a lot to be done. But for me, if it generates used cars that go into either the retail or the wholesale environment, and that's a positive thing to support some of the supply constraints in the used car market as well at the minute. So hopefully we'll get a lot of those Motability cars replenished this September. We'll get a lot of the PCP, PCH product replenished this September, and the normal retail cars as well. So one that we'll be watching very closely, I suspect, throughout September. But that's kind of it for this week. So lots to talk about, a lot of interesting stories there, and hopefully we'll get another special interview next week, just to talk about some of the results and activity in the market and what to expect for the remainder of 2020 from a forecasting perspective. But there's a lot happening, isn't there, still in this market?
Yeah, it's never a dull moment in the motor trade, is it?
No, not at all.
No. So that's all for this week. You've been listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Do stay here for our interview with the NFDA's Louise Wallis. As we've already mentioned, Louise sheds some much needed light on the return of the agency model and why it appeals to some dealers and some car makers. She also provides an update on the ramifications of this year's Brexit and why the expiry of the current block exemption in 2022 is still relevant for dealers in the UK. So just when you thought you'd heard the last of the block exemption, you haven't.
Yeah, is it 10 years ago now? I think was it it was about 10 years. I'm not sure in the last.
You know what? When I first started writing about the dealer market, which was 2001, one of the first stories I wrote about was the upcoming block exemption. So it had already been in place for a number of years. So I reckon it's sort of 15 years or more. Yeah. But there's more to come. It's not going away.
Exactly.
So do join Philip and I again next weekend for more Chatter That Matters with our regular review of the headlines. Until then, it's goodbye from me.
And it's goodbye from him. Hello and welcome from me, Philip Nothard, and Curtis Hutchinson to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. And many thanks again for joining us in this 21st in our series of special interviews themed around sharing best practices during the challenging times we're having across the sector. Previous interviews with Suzuki boss Dale Wyatt, Mitsubishi MD Rob Linley, Sytner CEO Darren Edwards, and last week's chat with Neil Adley, who's the founder of Judge Service, are still available, plus many more on the Apple, Google Podcasts, Spotify and SoundCloud and Deezer.
Today, we're delighted to welcome our special guest, Louise Wallis, Head of Business Management at the National Franchise Dealers Association. That's the trade body that represents the interests of franchise dealers and groups across the UK. So welcome to the podcast, Louise.
Yeah, hello and welcome. And I'm going to say welcome, which I shouldn't say. Yeah, it's great to be on, and this should be interesting.
Yeah, no, it's great to have you on the podcast, Louise, and it's also very timely as well because we're recording this on the 1st of September, which obviously is a key month for franchise dealers with the launch of the 70 plate. So thanks for joining us on what is a busy day for the sector. Now, we thought this would be a good opportunity to bring listeners up to speed with what's happening in the franchise sector by looking at new car sales, the impact of the lockdown on dealers, the growing talk of the return of the agency model, and I'm really looking forward to hearing your views on that. We've also got the impact of Brexit and the latest on block exemption, which expires in less than 2 years now. So plenty to chat about.
Yeah, there is. So welcome back, Louise. I mean, it's been a while since we've had you on the podcast, and I think that we can safely say that the sector's moved on a little bit since last time you were on the podcast, with lots of things taking place as Curtis has just gone through there. So let's start off with thinking about the plate change. I mean, indications as we've recorded this are that August is potentially marginally down, and you've probably got a view on that. But, talking about the plate change, we know there's already a lot of talk about September being a bumper month for the new car registrations, obviously as a result from the pent-up demand for new cars caused by obviously the lockdown and what we've been through. But what are you hearing from members of the NFTA about the September demand and how big an issue you think supply could be at the minute?
Yeah, I mean, the general sort of chat at the moment about the September market is that actually there's a lot of demand from consumers to buy cars. I mean, some of that is still pent-up demand coming through during the lockdown period, but also we were missing a very substantial number of cars at the end of March, so there will be people who will be wanting a new plate car who didn't get one in March and will be wanting one in September. I think the biggest dampener on the market that is potentially there will be supply. I think supply of the right cars will have some impact on the market. I still think the September market will be strong. It just could have perhaps be a little stronger if more cars were coming through, but that may well be a good thing for later in the year as we go into quarter four. So at the moment, fingers crossed, it will be pretty good.
And do you think that's, I mean, obviously with the last two Septembers we've been influenced by RDE in last year and WLTP the year before, which when we say August is potentially marginally down, I mean that's on the back of two strong Augusts due to the pull forward from the previous Septembers. But do you think it'll be, do you think nowadays we need to look at August, September as kind of 2 months together now at the minute when he's doing some sort of comparisons?
Well, I think inevitably the months before the plate change will always be subdued because people will be thinking about taking the car the month of the plate change rather than before. And I mean, this has happened for years and years and years, and we have the same issue with February every year. So in some respects, yes, you do sort of have to look at the months almost together. And I'd never say we write off August because that's very unfair, but I think we tend to accept it's going to be a subdued month compared to the following month where people want the cars.
And following on from that, Louise, so we know that July was strong. August, as you say, could be subdued. September looks though it will be a particularly strong month. But where do you think this leaves Q4? Do you think that there'll be enough momentum in the market to give dealers a relatively strong Q4 after what has been, a particularly tough time for dealers?
I think there'll be a number of factors that will actually help the Q4. One will be vehicles that people were trying to buy in September and may not be able to take till October and November. So that will help the back end of the year and certainly quarter four. I think there are a number of people who have money to spend at the moment because they will have decided not to take that foreign holiday because it's just too risky to go abroad at the moment and not have to quarantine on the way back. And I think people haven't been spending money, so there is money around that will help Q4. I mean, there are factors that are not going to help the quarter, particularly around employment and redundancy and the end of the furlough scheme. But I think on balance, I think Q4 will probably be okay. I mean, I don't think it will necessarily be a bumper Q4, but I think it will hold up.
And in terms of, the lockdown, it caused some casualties. Some may say those were casualties that would have happened anyway without the COVID lockdown happening in the longer term. But, it's created renewed talks of increasing consolidation. We know that some of the PLCs and large groups have been out in the market saying that they are on the lookout for opportunities if they present themselves that align with their strategy and portfolio of partnerships. But do you think the economic conditions caused by the lockdown and the impact of COVID-19 will accelerate consolidation in the fourth quarter of this year, but more importantly into 2021?
I think the general pattern is consolidation across the industry, and that was happening pre-COVID, as you say. And I think that will continue. There'll be a number of people, particularly smaller dealers and smaller groups, that may well decide that it's the best time to get out, and there's a good opportunity to divest of their interest in the motor trade, and they will get bought up by a number of dealer groups who have actively said that they are looking to expand and to augment their portfolios. I mean, I think there'll be some realignment as well. I think people will look at the franchises they've got and maybe concentrate on certain franchises and not others, depending on where they position themselves. So yes, I think there will be an acceleration of consolidation that has already been going on.
Now, I mentioned it earlier, Louise. Dash Gupta, in a recent interview in the press, said that he was in favour of an agency model for new car sales. And I know that Marshall operates an agency model with some brands. But he's saying that, in some instances, he prefers it over the current franchise model, citing in particular the sort of savings that a group would make in terms of stocking costs. So how prevalent is the agency model amongst NFDA members? And do you expect to see a move towards wider adoption?
I mean, at the moment, it's not the mainstream model within the industry. I mean, it's still the franchising model that we've known for many, many years that's ruled by the block exemption. But a number of manufacturers have looked at agency and are introducing agency models. And that may well get momentum as we go forward, because there are benefits for taking on that model, particularly for dealers, over things like stocking costs, as you say, and also over some of the standard issues that are there for dealers. And some manufacturers like the idea because they're not tied into the same franchising agreements that they would be with the current model.
That's interesting then. So it does work both ways. There would be advantages for OEMs, not just dealers.
Yes, I mean, the advantage for a manufacturer is that in many respects it's easier to get out of an agency model much quicker than having to roll out on a franchise. And it's not governed by a lot of the contract issues that you have in the same way with a franchise agreement. So for them, it gives them more flexibility, which is the benefit, though there is the downside that they have to carry the stocking costs of the vehicles, which under the franchising model doesn't happen.
And I mean, in terms of the members of the NFTA, I mean, say the members of the NFTA, I mean, potentially you cover 97%, I think it is, or thereabouts of the franchise dealers in the UK. But is there increased talks around that agency modelling, and is it starting to gain some traction? And we say it's a sort of two-way, so there's some interest from OEMs as well as the franchise dealers. I mean, what's the rationale for dealers not wanting the agency modelling? Is it about profitability and control away from the OEMs? Is there a risk of does it challenge the potential relationship between the OEM and the consumer? In terms of the data and ownership, is there what are the conversations taking place?
I mean, one of the big issues is who owns the consumer in an agency model. So because the manufacturer is effectively having a more direct contact with the consumer, then you do have the relationship between the manufacturer and the consumer, which you don't get in the same way with the dealer model. So you're losing control of your customer. So that is one of the bigger problems with it. It also tends to be a less secure model than the franchising model at the moment. And I mean, there's two ways of looking at that. In some ways, it's easier for the agency model to be broken, which can be of great benefit to some dealers who perhaps want to be able to have that flexibility. But it also means that when you've got levels of investment to put in, you actually want the protection of a contract that's in place and is harder to break. So the swings and roundabouts, it's to a certain extent what suits that particular manufacturer, more to the point what suits the particular dealer.
Moving on, Louise, there's two linked events coming up which will impact the franchise sector. So this year we have the UK formally leaving the EU at the end of the year, and we've also got the expiry of the current block exemption in May 2022. So firstly, how are franchise dealers preparing for Brexit? And also, what do you think will happen when the block exemption expires, and will it be replaced by a UK-specific domestic exemption?
Yeah, I mean, everybody's looking eagerly towards the end of the year and finally you're coming out of the EU in the way, or so that is, yeah, everybody is preparing. I think everybody is very much hoping that there will be a deal and that we don't have any issues with exiting. I mean, the hope is that the deal will mean that we will have tariff-free entry of vehicles from Europe and across the rest of the world as well, so that we don't have an uplift of 10% on the value of vehicles, which would be very damaging for the market. So, yeah, I mean, dealers are preparing the way for in case we have a problem, but I think everybody is optimistic that something will be in place that will make sure that there isn't such a cliff edge as there could have been. I mean, in some ways, the bigger issue potentially is the block exemption that will go in 2022 and 2023 when we lose the two block exemptions. These will be replaced in some format within Europe. And though, as everyone says, well, why does that affect us? Because we'll be outside of it. Dealer contracts still will be written in line with European law because most dealer contracts are European-based. But also the UK government will adopt something that will mirror what is coming into Europe, because that will be how we'll be able to operate and trade with Europe. So we have to take a huge interest in what is happening with block exemption, because it will still affect UK dealers quite considerably.
And is there lobbying going on at the moment that will shape the block exemption that comes into place in 22 and 23?
Yes, there's a huge amount of lobbying going on, partly from us. I mean, we're having or have been involved in regular meetings within Europe to help shape what's going on and to influence what is happening. I mean, we are, unfortunately, the UK isn't necessarily seen in the best of lights in Europe, but we're working with other dealer organisations within Europe to formulate something that hopefully will help everybody. So that's hugely important. So that is going on. There's a lot of work going into that at the moment.
And we were talking just on that point before we started to record, but obviously the relationship between the early conversation around agency modelling and the block exemption changes. I mean, they are purely two separate challenges, aren't they? I mean, the agency modelling is potentially a change that's coming, and that's to the benefit, as you say, the OEMs and the dealers, both ways, depending on what they want. But is there, could the block exemption have any influence on that? Is it a case of those that represent purely UK businesses are at more risk than those that may have representation in some of the European countries, or is it very much separate challenges?
I mean, I think whether the agency model takes hold will be influenced by what happens with the block exemption. I think it will depend how well balanced the new block exemption will be in favour of the dealer or the manufacturer, or whether it is finely balanced between the two. And I think manufacturers will take a view on how they structure their agreements and their dealer networks dependent on what comes out of the block exemption. We will push for greater protection for dealers, and that's part of what our lobbying is at the moment. But manufacturers may see that, may find that not put to their liking, and that might well push different models out there.
And I don't know if you know, I mean, I don't know if you're aware, I'm not aware, but is agency modelling, is it, we're talking about it potentially gaining traction in terms of conversations in the UK, but does it happen more elsewhere in some of the European countries, or is it basically an OEM is moving towards agency modelling no matter what the country, or is it prevalent in other areas? Or I'm not sure if you're aware of that or not.
Not so much how it pans out in the automotive industry. I mean, agency model is quite widespread in other areas of business. It isn't something that's been prevalent within motor retailing because of the block exemption and the franchising model, but there are other sectors that do use the agency model to actually do business. So it wouldn't necessarily be a major change in that respect, though it would be a major change for the sector in the fact that we have been wedded to a franchising model for so many years.
And finally, I mean, you've mentioned obviously the lobbying that the NFTA are doing around the block exemption, and I think one of your messages at the minute is it's coming quickly, and you know there's been a lot of things recently, should we say, to take the focus elsewhere. But I know you're very keen on getting the focus onto the block exemption because it'll be upon us before we know it. But is there any other campaigning that the NFTA doing at the minute and pursuing at the minute, and just to follow that up a little bit, and how would you describe the mood of the dealers in terms of a post-lockdown marketplace?
Yeah, I mean, as far as what we're looking at, I mean, one of the biggest challenges we've got at the moment, I think, is the issue over environmental issues, and particularly electric vehicles and the longevity of petrol and diesel. So, I've been heavily involved in lobbying around what happens, and with the deadline from government of 2035 on diesel and petrol. We're particularly keen to actually lobby to say that hybrid actually still has quite a major part to play in getting the green agenda over in cars, because at the moment the government seem very, very anti that, and it seems everything is pushed towards sort of full electric. But there's still a lot of hurdles with that, particularly with the public at the moment, particularly over cost and the infrastructure issues around it. So that's a very big piece of work we're doing, and we're also supporting that with things like EVA and the standards that go around that as well with dealers. So that's quite a major part of what we're doing at the moment. And then we're lobbying all the time on all sorts of other issues. I mean, coming out of COVID, we're doing some work on rates and how that is affecting dealers, and the government is now looking at what they want to do with rate reform. So we're doing work on that. There's a lot of work around finance and insurance going on. So yeah, we're busy involved in all sorts of stuff.
It was quite interesting. It was quite interesting. We were talking about the electrification at the pubs last week, weren't we? Was it Green? What were they called?
It was Green Kings.
King.
I don't know if you're aware, Louise, but there's a chain of pubs called under the Green King Brewery, and they're rolling out EV recharges. So they're hoping to have something like 900 on their sites by the end of the year.
Yeah, I mean, yes, I wasn't aware of that particular initiative, but it's the sort of initiatives that are really useful to have out there to get the public awareness, and also for them to have the security to know that they can get the car charged if they buy one. So it all helps the image of electric vehicles, and more to the point, the take-up of electric vehicles by consumers, because they know that they can get them charged, because that's been one of the biggest issues, that and range, of course. But cost is also the other big problem at the moment. So it's a growing market, and I expect we will see it grow much quicker over the next year or so.
And I mean, we touched on before, I mean, just saying about the mood of the dealers in terms of the post market. I mean, we were saying about obviously how resilient this sector is, isn't it? And I mean, there's always something. I mean, we'll finish with COVID-19 hopefully sooner rather than later. We've then obviously got WTO. We've then got block exemption. I mean, how would you describe? We said it, but are the dealers holding tight? Are they? Because a lot of them have been through a lot of challenges through the years, haven't they, and survived many times. What's your thoughts?
I think, dealers are extremely resilient, and I'm very confident that most dealers will find a way through this. I think generally, I mean, I wouldn't say that dealers are ecstatic about the situation, but I think most of them are are realistic, and they know that there will be some tough times ahead over the next year or so. I mean, 2021 could be a difficult year for the economy in general, but I think dealers are quietly confident that they'll get through it. The first 6 months of 2021 may be a tough market, but they will get through it, and they know that things will get better at some point.
Yeah, I agree. I mean, again, thanks for coming back on the podcast, and we need to get you on more often, because I think there's the things that you guys are doing at the NFDA and some of the knowledge that you've got around particularly things like the block exemption and WTO as we finally come out of the EU and other challenges that some of these UK franchise dealers are facing, and you've obviously got good connections in that European market, so we do need to get you back on. But for now, thank you for that insight. Really useful, particularly around some of these conversations around agency modelling and block exemption that seemed a long way away a while ago, but it's pretty close now, and I think what you're doing on that is fantastic for the sector. So thanks for coming on today.
Yeah, it's a pleasure, and thank you.
Yeah, thank you very much, Louise, for what was a timely update on the many issues facing franchise dealers as we nudge towards the final quarter of the year. That's all for now. You've been listening to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Please like and share on social media, as it's important during these times for the dealer community to work together and share experiences and best practices. Many thanks to you for listening and supporting the podcast. Philip and I will be back with the industry headlines on Saturday. Until then, stay safe and stay well.